Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we are looking at the fundamentals that are driving the markets currently. So Peter, how is the FX market behaving today?
So we had the US dollar which tended to edge a little bit higher, but overall I would dare to say that the big picture resembles a sideways movement of the US dollar index. So other currencies tended to follow. Any volatility was maintained at rather low levels. So we had a little reaction on that. And mostly we would dare to say that the initiative remained within the US dollar, albeit at a low volatility level.
And how about the US stock markets?
Well, US stock markets dropped considerably. It was characteristic how mega tech shares practically dragged Nasdaq lower. And it was not only Nasdaq that dropped, also the S&P 500 and Dow Jones dropped. So we had a movement which more or less underscored the fizzling out of the US stock market's rise over the past week. And we see a downtrend being continued mostly in the daily charts.
Interesting.
Yeah.
And how is gold price behaving?
Gold's price had low volatility, once again reflecting USD's low volatility movement as well. It edged a little bit lower, but nothing much. Overall, though, there seem to be some bearish tendencies which are rising and could drag gold's price even lower.
And how are oil prices moving on the commodities front?
Now, oil prices have been rising. They seem to be finding some resistance at around $110 per barrel. That's for WTI. There are a number of fundamental issues which tend to keep the attention of oil traders. And I would be highlighting practically yesterday's AP weekly crude oil inventories figure, which showed a considerable drawdown once again and may have provided some support for oil prices. We would highlight also EIA's weekly crude oil inventories figure. Should there be another drawdown and practically reaffirm the tight conditions in the US oil market, that could drive oil prices even higher, above $110 per barrel for WTI. I would highlight though also that the G7 meeting resulted in a decision that they are going to explore the possibility of trading some Russian oil, however, at low prices. Yet that did not seem to affect oil traders that much. The main issue for oil traders could be OPEC's intentions. We get the OPEC meeting today and tomorrow. Now, the big issue here is that it seems that the United Arab Emirates and the Saudis have hinted that they are reaching full capacity and they cannot increase production levels further. And should that be the case, we may see oil prices rising, given that on the demand side we see a rise of demand for the commodity, despite some recession worries. On the flip side, though, the production side seems to remain tight, and that could be a big issue, practically pushing oil prices even higher.
Okay. What are the main financial releases for the day?
Well, today we have, as we're speaking right now, we have practically from the Eurozone the economic sentiment and the business climate, which, should the drop, could weaken the euro somewhat, as it would imply practically a lack of confidence for the outlook of the Eurozone as such. Later on, we get Germany's preliminary HIC period, that's for June. It's expected to tick up on a year-on-year level. Yet I would note that there is an upside potential here. So we may see the German HICP rate actually accelerating further, implying that inflationary pressures are strong in the largest economy of the Eurozone, which may force the ECB practically to widen a possible rate hike to a 50 basis points rate hike in September, given that the July rate hike seems to be carved in stone, about 25 basis points. So that could provide some support for the euro. especially should in the following days also France's and the Eurozone's HICP rates accelerate as well. Later, we get, just about half an hour later, we get from the US the release of the US GDP rate. That's the final rate for Q1. And mind you that in the preliminary releases, the GDP rate was in the negatives. It was a big issue. And should the negative reading be confirmed, we may see worries about a recession in the US economy intensifying further. I would also like to note during tomorrow's Asian session, we get from China the NBS manufacturing PMI figure. Now, the NBS, National Bureau of Statistics of China, manufacturing PMI was below the reading of 50, it was at 49.6. That noted practically a contraction of economic activity in the crucial manufacturing sector of China. Should the reading drop even further, we may see the Aussie slipping as practically Australian exporters of raw materials more or less tend to expect or have high expectations about exports to China of raw materials. And should the economic activity of China actually slow down or even contract further, that could lessen the orders in the books.
Last but not least, Peter, isn't the ECB central banking firm today?
Yes, we have still, it started yesterday, it's still ongoing today. There are a number of speakers, however, I would highlight three. The first one would be Fed Chairman Powell. Now, should the Fed Chairman actually sound hawkish and more or less reaffirm the market expectations about a rate hike path of the Fed, which is quite steep, and underscore the bank's determination to fight inflationary pressures within the US economy, that could practically provide some support for the US dollar. The second would be ECB Lagarde. ECB Lagarde yesterday had made already the first speech, and she sounded more determined to curb inflationary pressures within the Eurozone. I would expect similar comments to reemerge today once again. So we may see the volatility on the euro being rather on the low side. And last but not least, and as we have mentioned before, would be BOE Governor Andrew Bailey. Should he signal that the bank may start orienting itself more towards a 50 basis points rate hike in the coming meetings, that could be providing some substantial support for the pound.
Great. Thank you, Peter. And everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome everybody to the technical analysis part of the presentation today. I've been already working on WTIs for our chart. We have mentioned in the fundamentals how WTI prices were on the rise, actually breaking the 107.55 resistance line, and seem to be finding some resistance at the 110.85. So we're going to be switching this resistance line now turns into a support line. Let's color it in green. And let's go hunting for a new resistance line. This peak here seems interesting. And there was some support here as well, resistance as well. I will be keeping this one. And that would be the 116.25. Let's readjust the labels. So make a start with the lowest support line, which is now being placed, the S3, at 101.25. The second support line being placed at 105.10. The first support line is being placed at 107.55. First resistance line, which is currently would be the 110.85, I've mentioned before. And the final resistance line, sorry, the second resistance line being placed at 113.80. Final resistance line being placed at 100, that would be 16.25. An upward motion which actually intensified is characterizing the commodities price. That was, the intensification was the day before yesterday on the 27th, Monday. But nevertheless, oil prices rose even a little bit higher, testing for the 110.85. We were unable to clearly break it. Yet the bullish tendencies tend to remain, given also that the RSI indicator is above the reading of 50, actually restarting to aim at the reading of 70. We see also the price action has stabilized after hitting on the upper Bollinger Band. So practically there is now some room between the upper Bollinger Band and the price action for the bulls to move higher. Should the bulls actually maintain control, we may see the price action breaking the 110.85 and start actively aiming for the 113.80, which provided resistance here, support here, while even higher we have just noted the 116.25 as the ultimate target for the bulls. If the bears take over, we may see the commodities price reversing course, actually start dropping, breaking initially the upward trend line, breaking also the 107.55. We would require that for a bearish outlook, and start actively aiming for the 105.10, which provided support here and here, almost there. Lower than that, we also note the 101.25, the lowest level in our chart right now, as formed by the price action. Interesting chart. Let's have a look at the US dollar index. The US dollar index, which tended to maintain tight range-bound movement, and it's currently trading between the 103.105.55. We tend to maintain a bias for a sideways movement of the index. It's characteristic that the RSI has been moving, revolving actually around the reading of 50, and that has been since let's have a look. Yeah, since the 16th of the month, which initiated the first wide drop, consecutive higher movement, and since then in a tight range-bound movement. Yeah, it's actually now trading at 104.19. Sorry, yeah, 19. Should the bulls take over, for a bullish outlook, we would require a clear breaking of the 105.55 and for the index to start actively aiming for the 107.50. In a possible bearish scenario, we may see the price action reversing, breaking the 103.20, which provided support around the 16th of June, and start actively aiming for the 101.30, which provided support on the 30th of May. Let's have a look also now at Euro USD. There was some downward motion, but still within the frame of the sideways movement between the 1.06 and the 1.0480. Now we had an argument by a client investor which practically mentioned that there was an upward trend line of Euro USD if you based it on the choice of the pair in the forward chart, and that could be working, but there are two issues for the possibility of an upward trend line. Now, the first issue, let's readjust the level though to more deliberate, somewhere here I would imagine. The first issue is that we have an upward movement in the choice. That's correct. On the flip side though, we have to note that the peaks seem to remain rather constant around the 1.06 resistance line. So in my opinion, I would require consecutive higher choice, which are on the chart, and consecutive higher peaks as well for an upward trend line. Now, just having higher choice but rather stable peaks, that would be forming practically a triangle. And in this case, the triangle was broken to the downside, actually breaking the upward trend line, which the investor had mentioned. So we tend to maintain our bias for a sideways movement here. Between the 1.0480, note how it was almost tested during today's European session, and the 1.06, which was tested yesterday. So the levels were reaffirmed once again. The main body of the price action remains within those levels, and that's since the 16th of June once again. I would be highlighting also that the RSI indicator has been moving around the reading of 50, actually a little bit higher than the reading of 50, despite dropping somewhat yesterday and today. Also note how the price action dropped and bounced on the lower Bollinger Band as well. Once again, base scenario for Euro USD remains a sideways movement between the 1.06 and the 1.0480. Should the bears though take over, given that we had a bearish movement yesterday and during today's Asian session, we may see the price action being finally able to break the 1.0480, which was aimed for here, tested here, here, and as a resistance line here, and start actively aiming for the 1.0355. In this case, we may see a number of lower peaks, lower choice starting to form. To the upside, and should the bulls take over, we would require a clear breaking reversal of the downward motion into an upward motion. I would also require clear breaking of the 1.06 before calling in the bulls for the pair, and for the Euro USD to start actively aiming for the 1.0755, which provided resistance here, was aimed for once, twice, tested 3, 4, 5 times. So it seems to be quite solid as a resistance line. Okay, interesting. Let's have a look now at GBP. Once again, sideways movement. Let me adjust the levels just a bit. There we go. Nevertheless, we had a downward motion, probably driven by the strengthening of the US dollar in a similar fashion as with the Euro USD, the chart we just saw before. Nevertheless, GBP USD's downward motion seems to be respecting the 1.2175 as it's being tested. However, it's not being clearly broken. So we keep our bias for the 1.2175. Nevertheless, the bearish tendencies seem to be more clear here, and we should note that the RSI indicator seems to remain constantly below the reading of 50, which may imply that the bears are about to continue the pressure. Nevertheless, for a bearish outlook, we would require a clear breaking of the 1.2175 and for the price action to start actively aiming for the 1.2070. On the flip side, should the bulls take over, which does not seem to be the case right now, but nevertheless, let's cover that option, the rise. We would expect the price action of cable reverse direction, start actively aiming for the 1.2325. For a bullish outlook, a clear breaking of the R1 1.2325 would be required, and the price action to start actively aiming for the 1.2470, which used to be a support line, and as the price action has turned lower, is now being reversed to resistance line. Note how the price action has also met the lower Bollinger Band, which may slow down any bearish movement. It actually seems to be doing that right now. Okay, let's have a look at USD JPY. USD JPY, which has risen, has broken above the 135.6 resistance line. So we're going to have to readjust this. Just a quick look how the monthly chart is moving. It doesn't go that back. Nevertheless, the MT4 I have in my office seems to show another resistance line. Give me a sec. 140. So let's reverse this. Correct. It's also a very round figure, and also a level which is considered a must for possible market action by BOJ. So we're changing now the third resistance line, making 140. The second becomes the 138.50. First resistance line now is being placed at 136.75. First support line is prior resistance line 135.6, and as the price action has turned higher, now becomes a support line. 134 being the second support line. The final support line being placed at 133. It is. So we have a rise of USD JPY and a stabilization between the 136.75 and the 135.60. I know I keep the margins between the two levels at very tight and very close to each other, so that's understandable given the low volatility for the pair. So some stabilization seems to be taking place. In my opinion, though, we may be seeing still some bullish tendencies. I would like to see, though, the pair actually breaking the 136.75 resistance line, which capped the pair's upward motion, and that was on the 22nd of June. Mind you that for the recent months, that should be the highest point. Yep. definitely. So we may be seeing, there we go. I would like to make a readjustment though here. It's too narrow for me. I want to give it some breathing space. Something like this. See the levels tested here and here. I'm going to be readjusting, recalibrating practically the pair. That's 131.45. And 133.35. Keeping the 235.60 though. Okay, should the bulls take over, we may see the pair breaking above the 136.75 and start aiming actively for the 138.50. Mind you that the pair is already at very, very high levels. We're talking levels which have not been seen since 2098. So we may see the bulls hesitating somewhat here. On the flip side, the RSI indicator is above the reading of 50 and it's actually aiming for the reading of 70. And that could be a signal that practically there is a bullish tendency or some bullish sentiment in the market for the pair. A possible strengthening of the US dollar may not be able, JPY may not be able to resist that. In which case we may see the pair actually breaking the R1 and start aiming for the R2. On the flip side, say enough is enough and take over. We may see the price action breaking the 135.60 and start aiming for the 103.35. And there was a client which was kind enough to note about the possibility of an upward trend line, which is correct. The idea is an idea, given that we have higher peaks and higher troughs. Yet, on the other hand, I would like to see the price action actually breaking above the 136.75 before calling in the bulls. But the hunch of the note mentioned before seems to be somewhat valid. It would be even more clear if we drill down to the 1 hour chart, widen it. Yeah, it is. Once again though, I would like to see the price action breaking the 136.75. Let's have a look now at USD CAD. USD CAD, which was dropping, the downward motion seems to have been broken. Yep. Stabilization of the pair just above the 1.2865 seems to be solidifying. The RSI indicator has neared the reading of 50, yet seems to remain still below it. But the upward motion and the breaking of the downward trend line tend to signal a trend reversal. So the bearish outlook, we're forced to leave the bearish outlook behind us, at least initially, for the time being. And we switch it in favor of a bias to a sideways movement. Once again, as the initial stages show a stabilization just above the 1.2865. It's a very tight range bound movement. I doubt if that will last for long. most probably we may be seeing some movement to either direction. We will have to wait and see, and especially I would be keeping an eye out for oil prices as well. Should oil prices actually continue to rise above $110 per barrel WTI, as we have mentioned before and seen on our charts before, we may see USD CAD having new bearish tendencies, and in such a case, I would require for the pair to break below the low point, which was noted here at 1.2820, and start actively aiming for the 1.2730. That could be a clear indication for the presence of the bears regarding the pair's direction. Use the CAD. Note that we're talking always about the 4-hour charts. Should the bulls take over, say for example, if WTI prices practically prove unable to break the 110 retreat lower, substantially lower, that could push USD CAD higher towards the 1.2970. A clear breaking of the 1.2970 in conjunction with consecutive higher peaks and higher truths would be signaling an upward trend line, which would be directing the pair. Yet that would require also a possible clear breaking of the RSI indicator above the reading of 50 and start to actively aiming the reading of 7. Once again, for the time being, a sideways bias for the pair. Let's have a look also at the Aussie, another commodity currency. Once again, a bias for a sideways movement. We could make a small readjustment here. Given the low point here, too narrow. Let's keep it. 1 point, cancel. 68.50. So we maintain a bias for a sideways movement despite the pair's downward motion. And note how it practically dropped from the upper Bollinger Band all the way down to the lower Bollinger Band, where it seems to be stabilizing somewhat for now. However, I wouldn't be surprised to see the price action moving lower, pushing also the lower Bollinger Band even lower. It's characteristic how the RSI indicator has a nice downward movement, breaking below the reading of 50 and start actively aiming for the reading of 30. Should the bears take over, or if you prefer to switch our bias for a sideways movement between the 0.6950 and the 0.6850, we would require clear breaking of the S1, and for the price action to start actively aiming for the 0.6730. That would provide us practically with the peaks and lows, consecutive lower peaks and lower lows, which would form a downward trend line guiding the pair towards the 0.6730. On the flip side, should the bulls take over, we may see the price action reversing course, breaking the 0.6950 and start to aim for the 0.7035, which provides resistance here as well as support here and resistance again here. A second safe haven, that would be USD-CHF, downward motion, possibly breaking the 0.9550. However, note that we had false breaks before. Just as a precautionary, well, let's readjust this. Let's find the new support line. Here it is. In green, dark green as support line at 0.98 285. Touch being placed around the 12th of April. Readjusting the levels as well. Now let's readjust the labels. So as the highest level noted in our chart, we place the 0.9765. Second highest level would be placed now at 0.9640. First resistance line, which has just been broken, albeit not clearly. So I wouldn't be surprised to see the price action jumping just above it once again. Being placed at 0.9550. First support line at 0.9455. Second support line being placed at 0.9370. And last new support line being placed at 0. Let me have a look. That should be 9280. Just found it, by the way. 9285. 0.9285. Let's lock this in. So we had the downward movement of the pair. There you go. We have lower peaks, yet that does not seem to be followed by the trough. So we may see some sideways movement, yet some bearish tendencies may be present for the pair. It's characteristic that how the RSI indicator is below the reading of 50. It's actually aiming downwards towards the reading of 30, while the price action has reached already the lower Bollinger Band, and that could be stalling the bears somewhat right now. Nevertheless, should the bears actually maintain control, we may see the price action starting to aim actively for 0.9450, maybe even breaching it. On the flip side, should the bulls take over, we may see the price action reversing course, breaking the 0.9550, breaking the pre-mentioned downward trend line, and start actively aiming for 0.9640. Okay. Let's have a look now at gold's price with bearish tendency still present. Lower peaks, lower troughs being formed. So we tend to maintain a slight bearish outlook for the precious metals price. And should that be intensified, we may see gold's price actually breaking the 1807, which provided support here and here, and start actively aiming for 1787, which provided support here. On the flip side, should the bulls take over, we may see the price action reversing course, breaking the downward trend line, breaking the 1836, and start actively aiming for the 1870, which provided resistance once, two, three times in my opinion. Okay, let's make a switch now to US stock markets. Okay, we had a clear downward movement of US stock markets. What we are seeing here is the Dow Jones 4-hour chart. Now the downward movement has broken the 31,345, which is now being turned into a resistance line. We have to go hunting practically for a new support line. Let's drill out to the daily chart. 4-hour chart. So we have two candidates. One level is this one with the lows being here. And that would be the 29,240. The second candidate would be somewhere here at 28,915. I'm going to keep this one. Let's readjust. So we have the final resistance line being placed at 32,470. Sorry, 32,760. Second resistance line being placed at 31,955. First resistance line now being placed at 31,345. First support line being placed at 30,625. 30,625. Second support line being placed at 29,690. Let me correct that. And the final support line being placed at 28,915. Note how the price action practically dropped after failing to reach the 31,955. It was actively aiming for that level. And the upward trend line, as revised, has been broken. Clearly, it cut through it like a hot knife through butter. And has stabilized between, at least temporarily, between the 31,345 and the 30,625. The big question is whether the price action is going to continue its downward movement or not. I would like to see how the US session is about to open this afternoon. Should the bears actually take control, we may see the price action, given the volatility presented yesterday, breaking the 30,625 support line and start actively aiming for 29,690. On the flip side, should the break over, we may see the price action reversing course, breaking the 31,345 and start aiming for 31,955. I would like to take a look though on the daily chart as well. It seems to be a downtrend line being formed. Yes and no. Why? Because practically the consecutive lower peaks. However, this peak is lower than the next one. So what happened was that we had a downward movement, which was like this. It was interrupted. It was restarted and has broken at even lower levels than the previous ones, and yet has corrected once again over the past 10 days, only to once again correct lower yesterday. Overall, though, our outlook tends to remain bearish. In the longer term. For the time being, we expect the stabilization to take place. However, that could be threatened also by the US Open during this American session. And should the bears take over, once again, we would expect a clear breaking of the S1 30,625 and for the paired index, to start actively aiming for 29,690. Let's have a look at S&P 500. It should have a similar movement, and it does. Similar drop, similar stabilization. And Nasdaq, which tends to be more interesting, once again, wild drop, some stabilization, slight tendencies, bearish tendencies in the past 1-2 hours. Let's readjust the levels a little bit here. They're understandably wider. Daily. Could be here. Let's have a look at the 4 chart. Yep. 1-2 touches being placed at 10,680. Green, please. Yep. Locked in. Let's have a look at the chart once again. Readjusting the levels. 12,935. 12,440. 12,100. 11,490. 11,030. And 10,680. Once again, stabilization expected, but we may see bearish tendencies being initiated in Nasdaq as well during today's American Open. That should be it from us at IronFX. Best wishes for solid trading.
Hello traders! Today I will be talking about a few important trading tips. Funding has always been a major concern for traders. Our best advice will be to trade on money you can afford. Never invest money you need for day-to-day needs. For example, never take from your rent money to invest. Set some funds aside, that way you can avoid additional stress during trading and perform better. From there on, assess how much capital you're willing to risk on each trade. analysts suggest that many successful day traders risk less than 1% to 2% of their account per trade. That trading tactic would allow you also to be able to open new positions should the chance arise, as the total of your capital will not be tied up. However, be careful not to fall in the trap of overtrading. Set aside a surplus amount of funds you can trade with and you're prepared to lose, and always remember, it may or may not happen. Who you want to be as a trader and who you are could be different. For example, some traders aim for a home run. That could be a large profit that could take a month or two to be realized. On the other hand, you have traders that are willing to take the same risk to do that same profit in a day or a matter of hours. Even though either scenario is possible, attempting to make a lot of money on a daily basis could impact your well-being, as the stress levels are unbearable. You have to do it one step at a time. Take your time with your trading, but be consistent. Some days choose to stay out and just observe the market and try to learn something new through your demo account. Your goal must be to stay in the game for this long term. This is not a sprint, this is a marathon. You have to prepare yourself for certain things to happen. So keep going at it, whatever the case, just keep hammering away. We always question a trader's ability to be a consistent profit maker when overtrading. Some traders believe that when they trade a lot, there are more chances of making money. From our point of view, that statement could be misleading, as the good trading ideas usually require very experienced traders in order to be enacted upon. Good trading ideas usually have a reason behind them. The reason stands out so clearly that you can't help it but place the trade. However, to maximize your profits, you will need to execute the trade as fast as possible. Financial markets cannot tolerate hesitation. The moment will never be perfect and there will always be something in the way, but your eagerness to trade will make it possible.